Okay, so how do we use trend lines as confluences and as a tool to increase your win rate and the chances that you're going to be right and make money? So the basics of trend lines. Let's start on the monthly time frame. All a trend line is a simplification of the direction of price. Show that by drawing a line. It's just a simple geometric shape line to show what is price doing, because at the end of the day we got a million different things going on, so we want to simplify things as simple as possible so we have the best chances of making the right decision. So what do? We simplify it. Simplify. So now what do we have? We have wick to wick, respect to all these wicks. Okay, we have a downtrend trend line. Boom. Okay, what about an uptrend trend line? Okay, wick to wick. Boom, uptrend trend line. We get a simplification of this uptrend pattern so that we understand what's happening. So that is how to draw trend lines, whether it's an uptrend or a downtrend. And the one thing you have to realize with drawing trend lines is drawing trend lines sometimes is slightly subjective, because some people might choose to draw wick from wick like me, wick to wick. That's what I found works best for me. But some people, they like, drawing the middles of the body, candle body to the middle of the candle body. It really just all depends on you, and you kind of have to go through your experience trading and understand what works best for you and what is most comfortable for you, because everybody interprets their data and their technical analysis slightly differently. At the end of the day, what I realized after 3 years of trading is that trading is an art form in its own way. It's not just, it's not like a scientific mathematical thing. Yes, it is, but you have to understand it's also like a subjective art form that you kind of have to interpret in your own way. And through experience and expertise, you realize what works best for you. If you're a painter, maybe you like drawing on canvases, or maybe you like drawing on paper. Maybe you like drawing on different types of materials. You have to figure out what works best for you. And the same thing goes with technical analysis and drawing trend lines. You have to understand, okay, based on my experience, do I like drawing wick to wick like this? Or do I like drawing, a body to body like this? How do I like to draw it? What works best for me? What makes sense for me? That's what you have to understand. And that the only way you can do that is through experience and practice. So always practice, back test, forward test, and practice drawing your trend lines. I've been drawing trend lines for fucking 3 years. So I can do it with my eyes closed, and I understand all the little nuances of the price when it hits here and it hits here and hits here. But that's something that you can only pick up on through experience. I can explain that to you, and I'm going to try to explain that to you in this video. But at the end of the day, the only way you're going to fully understand it and internalize it is if you do it on your own and have the experiences of being right and being wrong. Okay, so how do we draw trend lines and interpret them? As I said earlier, I draw wick to wick, so I'm going to go off making this video like that, how I do it. At the end of the day, you can change it how you want to later on based on your experiences, but this is how I do it. So why do we use trend lines? It's a form of drawing and simplifying the direction of the price. So we see here there's a respect in price. We see here there's a respect in price. So based off that, we are predicting and projecting that in the future, if the price hits here or hits this trend line whenever, it is going to get rejected and respected and fall down. And then from there, maybe it'll go higher and break the trend line, or maybe it'll respect it forever and just keep going lower. We don't know that. And the same thing with an uptrend trend line. We draw it wick to wick. And it got respected here. It got respected here. So what does that mean for me? Based on my future analysis projections, that means that if I see this price come all the way down here, then I think there's a pretty good chance that it's going to get respected and we're going to reject the trend line and go back up based on my analysis and my trend line. Okay, so how do we use trend lines on multiple time frames? This is super key because you have to understand that every time frame has a different, because every time frame gives you a different perspective on the potential price changes. And you have to understand the biggest time frames have the strongest influence and the strongest confluence and the strongest probability of working out. So if I draw a trend line on the monthly time frame, then there's a very good chance that it will get respected if it ever runs into this trend line, because there is so much volume, because there's so much volume going on the bigger time frames that no institution can truly manipulate price on the bigger time frames, because it costs way too much money. It costs way too much money for one institution or bank to manipulate price on the monthly time frames. It just costs way too much money. This is trillions and trillions of dollars. No bank can afford to risk trillions of dollars just to manipulate people. So chances are this trend line would get respected. And the only reason it wouldn't get respected and would get broken if there's truly a complete change in the economy. If there's a complete change in the economy that is so strong that all the institutions and banks and governments are realizing, okay, it is going to go in this direction because of a very big change in the economy, and force it to break a trend line and negate a potential projection based on a trend line. So the bigger the time frame, the greater the chance that your analysis and the trend line drawn on the biggest time frame, which is the monthly time frame, will get respected, because it just costs too much money to manipulate price on the biggest time frame. So unless there's a real fundamental huge change in the economy, chances are the trend line will get respected. And as far as fundamentals, that's the topic for another video, because that it would take too long to explain. So that is why bigger time frames matter. And the same thing goes for uptrends on monthly time frames. You know, you got an uptrend right here. So that's a pretty vital trend line that has a good chance of being respected. And then also on the weekly time frame, the weekly time frame is very powerful. You know, chances are it's going to get respected. The weekly time frame is also very hard to manipulate. So chances are technical analysis has a much larger chance of following through and getting respected. And your trend line has a large chance and a big chance and a good chance to get respected on a weekly time frame, because it just costs too much money to manipulate price on a weekly time frame. The only way that would happen is the same as the monthly time frame, if there is a fundamental change in the economy that broke the current trend. So that is the weekly and monthly time frame. And the daily time frame also pretty powerful, but I will say that it's not as powerful as the weekly and monthly time frame, because it costs less money to manipulate price. So you're going to still have, you know, things that catch you off guard on a daily time frame from time to time. And same with the 4 hour. But that really just depends on how well you're through experience. And I mean, I can try to later explain that in this video or another video, but that's something that you can kind of see before it happens sometimes based on your experience and practice. Okay, so let's do some analysis on trend lines. Okay, so you got a monthly time frame trend line right here. Boom. And I like to draw it wick from wick because I feel like that way it's more exact. I draw it so it hits right at the top of every wick. You got another uptrend trend line right here. Boom. So how can we use this analysis so far based on these two trend lines? We have a downtrend trend line. We have an uptrend trend line. That means that if it were to break this trend line up here, chances are we're going to continue in an uptrend. If we break this trend line down here and this came down and broke this trend line, chances are we're going to continue going lower. So that's the monthly time frames, and that's very powerful. All right. So let's make these bigger because they're the monthly time frames. I like to change the thickness of the line based on the time frame. That way I can kind of that way it makes the line seem bigger to correlate with the bigger time frames. All right, now we got the weekly time frame. Okay, what trend lines do we have right now based on current price? Boom. We got a trend line right here that got broken. Right? Boom. Wick to wick. So that tells me something that we could continue higher. You got a trend line right here. So based on these two trend lines, I would actually not use this bottom trend line because look what happened. It got respected, but it already got broken, right? It already got broken and tested this monthly trend line. So I would probably get rid of this since the trend line is already broken. When a trend line gets broken, I consider it invalid, and I could still use it in the future, but I tend to ignore it until something pops up that tells me I should bring it back. So for now, I would delete that trend line and just focus on this trend line. Okay, cool. We got a downtrend trend line that got broken. That's telling me that we're probably going to go higher based on this. And in this video, I'm simply just using trend lines and focusing on trend lines. Obviously, if I was doing a full analysis video, I would use like 5 other confluences and stuff, but I want to keep this simple as possible for people who are relatively new and are still learning how to draw trend lines. Okay, cool. So we got the daily time frame. All right, what do we see here? We see a trend line. So for this one, I would draw from this wick to this wick right here. And the reason is because, and this is the part that becomes subjective. You can draw from here, but I'm choosing to draw from here. Why? Because in my mind, from my perspective and in my opinion, I think that this point is more relevant than this point. This point is more relevant than this point. And these are the 2 points of the structure that pop out the most and are the most recent. So to me, the most recent data is the most important data and the most relevant data, which means it's the most, it's the best indication that it's the best way to project future prices. So I like to use the most relevant points. You could use it here, but I'm choosing to use here to here. And that's where I mentioned the subjectivity part of drawing trend lines come in. So I'll draw this. So what do we get from this trend line draw? This shows me that we're in an uptrend, right? Obviously, we're in an uptrend. But if we were to break this trend line, then chances are we would come down. We would come down if we broke this trend line. So that's what this trend line is telling me and how I would use this trend line on the daily time frame. All right, let's go on the 4-hour time frame. What else do we see? Okay, this trend line is pretty relevant, right? Okay, what about I don't really see any major things else that I would draw that would be super useful on the 4-hour time frame trend lines. So okay, let's go on a smaller time frame. Okay, we see a 1-hour structure that I could draw a trend line on. Okay, boom. So what is that? What does this trend line tell me if I draw this trend line out? This trend line tells me that if we break this trend line, we're probably going to go lower. Probably going to go lower to this 4-hour trend line. Boom. It means that if we break this trend line, we're probably going to go lower to this 4-hour trend line that we drew earlier. Because this 4-hour trend line is bigger than this 1-hour trend line. And now we see this big ass gap that we could trade potentially if we see a break of structure of this trend line down to here. And that's a potential trade. But of course, this is just one confluence. I would combine like 5 other confluences before I really thought about getting into that trade and executing that trade. Okay, so what about, so that's the main trend line I see that's relevant right now on the 1 hour, right? Okay, let's go on the 15 minute. What else do we see? Okay. The main trend line I see that's relevant, that I could use, that could be useful to me, is probably on the 15 minute, either this trend line that could potentially get broken, or you could draw it like, based on your preference, draw it like this. So what does that tell us? That tells us if this trend line is broken, then we're probably going to see a sell-off down to here. So boom, that's a potential confluence for an entry. And then I can confirm that and be more confident about it with other confluences I could combine with that trend line confluence. Boom. Okay, so what about the 5 minute? Well, I mean, if you look at it, the 5 minute and the 15 minute are pretty similar in structure. So I don't see anything that pops out to me like crazy. Actually, you know what? I do see this 5 minute trend line right here. Boom. So what does that tell me? What does this trend line tell me? That tells me if we break this 5 minute trend line higher, we could potentially move higher. And that's another potential trade. But I would also, again, add a bunch of other confluences to help me confirm that bias before really thinking about executing a trade, because this is just one confluence. That is how to draw trend lines on a basic to like intermediate level, and how you can use them to your advantage. So the key thing is to practice. You know, when you're first learning this, it's not going to be that easy to draw them, because you're still going to be confused about what's happening. So you got to practice, and the more experience and more practice you get, the better you're going to get with drawing the trend lines, and the easier it'll pop out to you. So just practice it. If you have questions and stuff that you want me to include in another video, leave them in the comments. Make sure you like the video, and then, you know, subscribe to me, whatever, and follow me. And I'm going to keep uploading videos, you know, leave comments and stuff like that if you want to see, if you have something that you're interested in seeing in a video, so you can let me know.